Everyone, and welcome to this explainer. I am super excited to guide you through today's topic. We are setting the stage for a true strategic masterclass on navigating Vietnam's foreign direct investment landscape. Listen, if you're looking at the Southeast Asian market, Vietnam, yeah, it's no longer just an alternative, it's pretty much the primary destination right now. But entering this market requires a whole lot more than just capital. It requires a profound understanding of the legal frameworks, the hidden bureaucratic realities, and the actual strategic pathways to getting established. By the end of this explainer, you are going to have a comprehensive blueprint for market entry. Let's get into it.
Here is our roadmap for today. We've got 1. The market's appeal. 2. Choosing your investment structure. 3. Preparing the legal foundation. 4. The licensing journey. And 5. Post-establishment operations. Okay, let's dive right into this.
All right, kicking things off with Section 1, the market's appeal. To really wrap our heads around the sheer scale of the opportunity here, just look at this number, 26 billion US dollars. That is the jaw-dropping total of registered foreign direct investment in Vietnam in just the first 8 months of 2025 alone. That represents a massive 27% jump compared to the previous year. If you're wondering if there's global interest in this market, well, there's your answer. That figure absolutely validates it. But, if we dig just a little deeper into the data, a really fascinating story emerges. While new project capital actually dipped just a tiny bit, we saw an unbelievable 86% surge in capital adjustments. Basically, existing investors poured an extra $10.65 billion into their current operations. That right there, that is the ultimate signal of market satisfaction. It tells us that businesses already on the ground are succeeding, they're generating returns, and they are deciding to double down. So for you, the focused learner, this shifts the entire conversation. It's no longer should I invest in Vietnam? The real question is, how do I set myself up to succeed exactly like they are? And this brilliantly illustrates one of the biggest reasons for all this newfound investor confidence. We're talking about a massive paradigm shift in the 2020 investment law. Basically, Vietnam moved from a super outdated positive list approach, where, you could only do business if your specific industry was literally written into the law, to a much more modern negative list approach. So now, the default answer is simply open for business. Unless your sector is explicitly banned or restricted, you are treated exactly like a domestic investor. This is an absolute game changer for innovative sectors like fintech, AI, and SaaS platforms, stuff that literally didn't even exist when the old laws were drafted. It gives tech pioneers some incredibly solid legal certainty. Moving right along to Section 2, choosing investment structure. So the two main arteries into the market are greenfield investment, which is building a 100% foreign-owned enterprise totally from scratch, and M&A, acquiring an existing Vietnamese company. Now, this isn't just about speed. It actually reveals your entire long-term capital strategy. M&A is fantastic for a really rapid market entry, especially if you're in services, because you completely bypass all the complex initial project licensing. Boom, you're in. On the flip side, greenfield is your go-to foundational choice for capital-intensive projects, like manufacturing. It lets you directly inject foreign capital into your operations, and it actually qualifies you for some pretty lucrative government investment incentives. Okay, so once you know your entry path, you need the right vehicle to get you there. As a foreign investor, you generally have 4 primary options. First up, the limited liability company, or LLC. This is the absolute workhorse here. It's flexible, it's straightforward, and it's perfect for most small to medium enterprises. Now, if you've got grand ambitions for massive fundraising or even an IPO, you're going to need the joint stock company, which does require at least 3 shareholders. But what if you just want to test the waters without actually generating direct local revenue? Well, then a representative office is your best scouting vehicle. And lastly, if you need boots on the ground literally tomorrow without forming a legal entity at all, an employer of record or EOR service lets you hire staff legally and instantly. Basically, you've got to carefully weigh your specific operational needs against these legal constraints. All right, let's jump into Section 3, preparing the legal foundation. Listen, before you even think about engaging with the Vietnamese bureaucracy, you absolutely must have your ducks in a row. So the crucial point here is understanding the gap between what the law actually says and how the market really works in practice. For most services, the law claims there is no general minimum capital requirement. Sounds great, right? Well, actually, scratch that. The government will flat out reject your application if your capital isn't deemed reasonable to actually sustain the business. Practically speaking, $10,000 is the recommended starting point for simple services. Plus, if you're gunning for a long-term investor visa, you realistically need a minimum of $130,000 injected into the company. On top of that, you're going to need a resident legal representative who actually lives in Vietnam, a commercial physical address, and no, residential apartments definitely do not count, and an absolutely airtight stock of audited financials and consular legalized documents from your home country. Which brings us to Section 4, the licensing journey. If you are taking the greenfield route we talked about earlier, you've got to navigate what I like to call the dual key mechanism. Step 1 is securing the Investment Registration Certificate, or IRC. Now, do not underestimate this one. This isn't just some simple form you fill out over coffee. It is a rigorous government approval of your project's financial viability, its location, and its overall economic merit. You basically have to prove you have the funds and a rock-solid plan. Only after you unlock that first key can you apply for the ERC, the Enterprise Registration Certificate. That's the second key, and that's the one that officially creates your legal entity and gets you your tax ID. Now, what's really interesting about this slide is how it grounds all this high-level legal theory right into day-to-day reality. This is the government's submission portal. Vietnam is rapidly modernizing its whole bureaucratic infrastructure, shifting heavily toward online filings and digital signature systems for the IRC. And while this is definitely going to streamline things in the long run, right now, it requires you to be incredibly painstakingly precise. I'm talking your physical ink-signed documents, your scanned PDFs, and your online data entries. They all have to match up perfectly, or you are absolutely going to face some frustrating delays. Finally, we arrive at Section 5, post-establishment operations. So, the government finally hands over your freshly minted business licenses. You're ready to hit the ground running, right? Well, not quite. The exact moment you receive your ERC, a very strict legal countdown timer starts ticking. Like immediately, you need to carve your physical company seal and open a highly specialized bank account called the Direct Investment Capital Account, or DICA. Then, within 30 days, you have to pay to publish your registration on the national portal. But listen to me, the absolute most critical deadline is 90 days. You have exactly 90 days from the issuance of your license to fully contribute your registered charter capital directly from your home country into that specific DICA bank account. Missing this 90-day window? No way around it. It carries some severe financial penalties and can literally paralyze your brand new operations.
Just to wrap up the logistical side of things, let's demystify the actual cost of entry. If you just look at the official state fees for registering a business, it looks like an absolute steal, right? I mean, often under 50 US bucks. But please don't be fooled by that. It's a total mirage. The true cost of market entry actually lies in professional services and mandatory compliance. Depending on whether you need a resident nominee director, comprehensive legal counsel, tax setup, or specialized sublicenses, your actual working budget is going to range anywhere from about $1,000 for just the basic paperwork, all the way to well over $20,000 for a fully compliant, completely hands-off setup. Getting transparency from your service providers early on is absolutely vital here. Which really leaves us with one final thought. The data proves it. Vietnam is a booming market, and the new negative list has thrown the doors wide open for innovation. We've walked through the legal requirements, we've broken down that dual-key licensing process, and we've mapped out those strict post-licensing deadlines. Yes, the path is complex, but it is entirely navigable if you know what you're doing. So I'm going to leave you with a rather provocative question, straight from our source material. How will you replicate the success of those who came before you? The blueprint is literally right here in your hands. Now it is time to execute. Thank you so much for joining me on this explainer, and hey, happy investing.